Okay, good morning and welcome, guys. Welcome to a brand new month. It is the 1st of November. It is Tuesday. This is Pounds for Breakfast. As always, I am your host, Dane Us. Guys, I'm super happy to be with you guys this morning. We're entering one of the biggest weeks in trading history, right? Specifically for the future of the dollar, and specifically for the future of markets and where we're busy going. It cannot get bigger than what we're seeing this week. Now, as I've explained, what happens this week is going to set the tone for the markets over the next 2 months. So you definitely want to be paying attention to that. Now, for those of you who've been invited to join us on the brand new platform, we picked up some bugs last night and we're busy with repairs on the new platform. So we've disabled the plugin temporarily, but we will pop out a message once it is ready to go and ready to be used. Again, the stress test is part of the beta program to make sure this can handle, tens of thousands, if not hundreds of thousands of users simultaneously. And it's part of the process of testing. So I've received some amazing feedback from you guys on the platform, some amazing suggestions, which we are looking at implementing, but it has absolutely changed my trading game. I'm seeing things in the market, possibilities and opportunities that just were not ever possible previously. You would need to use an algorithm or a bot to be able to trade in certain ways. And this allows us to do a whole bunch of unique things. Now, remember, if you are a premium client or you have $100 plus in your live account, I am doing a special event tomorrow evening, which is a training on the new platform. And then remember, we have that Federal Reserve interest rate decision coming out tomorrow. So we will be trading that live and we will be doing that in the new platform. So that's going to be powerful and you definitely want to be a part of that. Now, we do have some movements in the markets today. As per message in the groups, London DST has changed, right? They've entered and changed into summer solstice. And in essence, their clocks have changed, right? So where London was usually starting at about 9, we're now starting at 10 a.m. daily. We also saw yesterday the move on the sell that we were looking at in US 100 started to pop off at 10 o'clock towards the downside. So if you guys caught that sell on NASDAQ as well as US 100, massive well done. But we're going to see if we can do it all over again at 10 o'clock this morning. So London opens up in about 8 minutes and 5 seconds from right now, and we're going to see if we can capitalize on those markets. But first, we are going to have a look at essentially diving into some of the news and what is it that we could have a look at and where we could potentially take advantage of the markets, right? So let's jump in and have a look at what we are potentially seeing for this day. And we're obviously going to start off with local news, and we're going to jump further into international and then having a look at some of the fundamental data. So one of the big items here that I think is of importance is really talking about, this Eskom debt takeover. We did hear last week that the new finance minister has proposed and has taken on essentially that 400 billion rand debt pile of Eskom. Now, again, that doesn't solve Eskom's problems. That just covers their debt, right? Doesn't give them operating capital, doesn't do anything like that. So there are current estimates and there's, videos floating around that Eskom currently is in a position where they need another 1.7 trillion with a T rands in order to be able to essentially start to innovate and start to get back into shape. So I think it's definitely something we need to pay attention to. This obviously affects every single one of us. Now, in terms of international news, all eyes are going to be on that Federal Reserve interest rates, right? All eyes are going to be on, what the Fed is expected to do, what Powell is going to do. And of course, the big question is, will Powell break the markets with a further 75 basis point hike or even 100 basis point hike, right? That's a full percentage. This is what the markets are targeting. This is what the markets are looking at. And for our special session, our Pips for Dinner tomorrow evening, I will be breaking down the history of how things have evolved and where we will be going, right? So if you want to see part of that, you want to make sure you've got that $100 in your live account minimum, and you will get a link towards that Pips for Dinner session where we'll be breaking this down. But for today, we just need to understand that market's going to be a little bit cautious, anticipating that this data could be coming. We're seeing that weakness on the dollar. As I said yesterday, this could be the first time we start to see interest rate increases have a negative effect on the dollar, having a positive effect on indices and positive effect on commodities. So this afternoon, for sure, I think the New York Stock Exchange is going to be fire, and we are going to be trading that with quite, and there should be quite a bit of activity there. Right, so we will be going over the inflation data, the Federal Reserve, and again, we will be covering that interest rate live tomorrow evening at 8 o'clock, right? So Goldman Sachs on the euro pound news is saying that lifts forecasts against the euro and the dollar. I remember I was saying this yesterday, that the pound and the euro are very well priced, right? Extremely cheap to look for long positions. I know some traders, based on what I said yesterday, took some Euro USD long positions. If you caught yourself in that Euro USD buy, then a massive well done. You should also be in profits on those trades. Now we're seeing Goldman Sachs coming in saying the pound, the euro, this article says specifically the pound, but I know that they're also implying on the euro, has a really good forecast against the dollar. Again, Federal Reserve interest rates, if that 75 basis point wrecks the strength of the dollar that has been unnaturally strong, we could start to see some of those market reversals and markets start to come back into equilibrium and back into where they're supposed to be going. Now, as we move into some of the fundamental data, we're going to quickly have a look before that into the S&P 500 and what is currently happening across that heat map. Now we can see most of the day was red. We do have some outliers that we have some positivity on, but it's not a massively negative day. Meta is still getting absolutely dominated, -6% for yesterday. But outside of them being the outlier across, big tech and financial, we're not seeing anything more than around about 2% negative, which is the average swing for US 100, Dow Jones, as well as S&P 500. So fairly neutral day, I would say. Nothing really to write home about. Now, from a fundamental data perspective, we have quite a few different events happening throughout the day. A lot of information, right, for the day. And I've just limited to medium and high impact news. And again, the one we're going to probably pay the most attention to is going to be manufacturing PMI, producers manager index. And again, that is going to show whether these inflationary numbers are starting to come down, right? Now, again, it's a percentage out of 100, and it's, purchaser manager indexes, their strength and the confidence in the market. So they're expecting a flat figure from last month, 49.9. So that number goes up. It means that inflation is still here and the Federal Reserve is going to come out swinging. Now, remember, the Federal Reserve already has the NFP report from last month that did way better than expected. They have GDP that did way better than expected. So for this point in time, the Federal Reserve has all the ammo that they need to come out swinging tomorrow evening, right? So whether we get that 75 basis point hike or whether we get a full 1% is going to vary, right? After the last 75 basis point hike, there was a lot of economists that were criticizing the Federal Reserve, saying that their policies were going to drive the US dollar into the ground and essentially just destabilize the economy as a whole. So again, this is going to be very interesting tomorrow night to see the tone, whether we have that hawkish or that dovish tone for tomorrow. So manufacturing PMI is definitely going to be on the books for this afternoon, as well as JOLTS job openings. Now remember, from the 7th, right, of November, we also have DST shifts on the US time zones, meaning we'll no longer see the US market open up at 2. And currently we see US markets open up at 2. And then we obviously look at the New York Stock Exchange that happens at 3:30. In most cases, the New York Stock Exchange does not move at all. The US Senate passed a bill beginning of the year to essentially remove DST from most of the US time zones. It's obviously very difficult to conduct international business. And because we're such a globalized and connected economy, it's difficult for clients in Hong Kong to know that, California has moved an hour up or down. So it makes business a little bit difficult. But the New York Stock Exchange stays consistent. It only means that the New York open time, or the US open for the markets, is going to be happening at 3 o'clock every day. That's going to make our dollars for lunch super, super juicy, because it means at 3 o'clock, we get all that volatility of the US market starting. And at 3:30, then we get that New York Stock Exchange move. So this is one of my favorite seasons to be in the market, because we get this massive, massive volatility. So if you don't yet have a Globex 360 live account, and you're still waiting to get one, get yourself sorted out, because it is the best time and season to be a trader. Not only just a trader, but a trader with Globex 360, as well as our live broadcast and academy that is obviously launching very, very soon. So just a shout out to our community here. I can see a ton of people in the house: Zane, Rishi, Aiden, Heinrich, Tanya, Melisi, Waden, Terasel, John, Ruwan, Ntwaki, Mungusi, Tyler, Godwin, let's see, Mackenzie, I don't even know what that gentleman's name is, Leon, Fires, Zintle, Ntumi, Peter, Teboho, Joseph. There's just so many people here with us. So just a massive welcome to every single one of you. Guys, go ahead and do me a favor and go and smash that like button on this live broadcast if we've earned that. we are going to get into live trading. It is going to be explosive. We are going to jump in the next 20 or so seconds. But first, I want to see that like. If you aren't already subscribed, go ahead and smash that subscribe button. You want to make sure that you don't miss any new uploads. Now, when we post an upload, it will automatically pop up for you that you can obviously jump in, and you can then obviously make sure that you are, you get that notification. We can see here the, who's this? The Brettster, welcome, and thank you for subscribing to Globex 360 Live TV. Beautiful. So let's jump in it. We are going to have a look at what is happening in the markets. And as always, we're going to jump into the live trading section first up. But before we get there, guys, just remember the Globex 360 new website is very, very powerful stuff. We're improving the client area on a daily basis. So if you want to be a part of that, you obviously want to go to www.globex360.co.za, navigate to your client area, log in. Remember, it's a new client area. So we get a lot of clients asking, they can't log in. They're still logging in the old client area beginning of this year. We've obviously sent out a bunch of emails. We've sent out about a bunch of communications. It is a whole new site, a whole new CRM. It's a lovely place to navigate and be a part of. All right. So we're obviously here for the trading. That's what we're here to do. So let's have a look at what the markets are doing and what I suspect we could, and where we could have some activity, right? London has just opened up. Now, if we have a look at yesterday, we were looking at that scallop, right? We're looking at this market turning into a scallop. And we're looking at that sell side opportunity. We're getting that divergence on the RSI versus market structure. And we took a little bit of a sell there off of that market. We see that market sort of waited around, and then at 10 o'clock, at 9 o'clock, started that momentum and that movement. It was a little bit delayed. Let's just see here. Okay, so we have got a shift in clocks, right? So our MetaTrader is back aligned to its normal time. So when you read that it's 10 o'clock, it'll actually be 10 o'clock, right? So 10 o'clock, we got that shift down, and then we see that US 30 fell about 1,500 pips. So that's what we're looking for this afternoon, this morning rather. We're looking at, will we see that breakout towards the top side? And then we will obviously try and chase that and capitalize on that. Now, for me this morning, I'm looking at the zone. We are sitting on support from a US 30 perspective. That area is support. And our resistance break, or where I would consider looking for a buy, is in that zone right there. So what we're going to be doing this morning is we're simply looking at all three markets side by side, and we'll have a look at this on a 5 minutes just to make sure we're looking at everything at the same perspective. And you're going to see very similar market structures across the board, right? And what we're looking for is which market decides to chase and break out first. And then we're going to look at obviously capitalizing on that structure and how we can sort of potentially take advantage of that. So we can see a little bit of an imbalance at this point in time on German 30. So we can see that those high moves that we got, let's say 915, having a look at German 30, we're still sitting at support here. So what I would like to see across the board from an indices perspective to make for an extremely strong buy is I would like to see a breakout of this previous high that we've got over there. So on German 30, I would like to see a break of that zone. NASDAQ, I would like to see a break of that zone over there, as well as US 30 on the far left, also a break of that zone. So we are getting that momentum towards the top side, and that's obviously the start of the London session. But again, I would like to see that volume really come into play and start to make a long-term push. Again, I do think there is some positivity in the markets, right? There's an expectation that Powell will raise interest rates. So I'm popping in a little bit of a prelim buy here. So what I'm doing is I'm just popping in a feeler trade for a buy should we see that momentum continue towards the top side. And I'll put in maybe 2 feelers there. Yeah, I'm pretty happy with 2 feelers. Like that. Again, and just to let everybody understand the bigger picture, again, this is US 30. We are buying because we are still in a bull market. We're looking at breaking some of those previous highs. That is what it is all about. So again, just to make sure everybody is aware, we are on US 30, not gold. We are on US 30. And you should already be in profit. There we go. Nice push to the top side. So you should be in approximately, I would say, about 200-300 pips of profit here. I'm going to put in a trailing stop, and we're going to engage potentially about 2,000 points from a trailing. and I'm going to do that for both of my trades. So 2,000 points trailing as we get that pop in momentum towards the top side here. So we just want market prices to break this high, and then the trailing will go back to even. So that's just in case markets hit a resistance and then decide that they would like to try and do that little bit of a pullback, and then trailings will engage. So I'm just pulling stop losses into profit there, and I'm just basically putting myself into a break-even territory. Because again, we've got a market structure, we've got an overextension of that market structure, which means we should continue. So there we go, my trailings are now kicking in, and we've got a nice healthy push to the top side. We're running about 300-400 pips in profit on that one. Let's just quickly switch back and make sure we're getting, yes, beautiful. So we're getting breakouts across the board, nice volume to the top side. And let's have a look here. We should be running in the region of about 400 pips here. And again, we are through that zone. So it's just a matter of managing risk and managing and making sure that we obviously maintain a stop loss that is not too greedy. But again, we also don't want to be in a position where, markets do a quick pullback and then take us out. So as soon as markets have moved and I've covered myself, what I generally like to go ahead and do, and I'll zoom in here, there's a 1 minute time frame, is I will generally go ahead and adjust and make my trailings even bigger. So once I'm just past entry, so example, I might use, let's say, a 4,000 points now, because we are running about 400 pips in profit. So that would mean that my stop loss stays at entry. Let's go that. 2,000 points. I'm going to make that 4,000 points. There we go. And that would mean I can pull my stop losses back to entry. And only if we break out of that zone, right, then I'll start running more and more into profit. I think I'm going to maybe adjust to 3,000. Just looking at the depth of this market, I think 3,000 is good enough. So that'll mean 300 pips in profit. There we go. My trailing stops are now working on 3,000. There we go. So now my trailing stops are past entry. No matter what this market does, I'm sitting as an investor in the US30 to the top side. Again, and there's a few things that are driving this. Some of it is sentiment, and some of it's just opinion on the market. But the reality is that if Powell comes in with that 75 basis point or the 100 basis point, there is a belief that this is going to be the last intense interest rate hike before we start tapering off those interest rates and start to allow the economy to breathe, right? But again, he's going to have to point to some really good data to show why and has the economy shrank. We know that his previous meeting about 2 months ago, he pointed out that they're looking for unemployment rates to increase to around about that 4.4%, up from the 3.8, 3.7 that they were currently sitting at. And again, NFP this Friday is going to be either a massive contradiction towards their efforts, or it'll be a confirmation that we are on the right track, or he's on the right track. Obviously, the US dollar being the most traded currency in the world. Again, when I say we, and again, we're traders, the dollar matters quite a bit to us in order to be able to take advantage. So I'm going to leave those trades intact. I'm not going to be doing anything with them. Again, we're getting a slight pullback. German 30 gave a massive breakout here to the top side. German 30 potentially moving the most, right? German 30 has moved, well over 700 pips to the top side. Let's have a look here. NASDAQ only about 200 from the point of breakout. And our trade specifically is around about, the total move is about 400. So German 30 definitely doing the most. On a 1 minute time frame, I'm liking the fact that we're getting, that little bit of a pullback. I would like to see this candle finish off as an engulfing candle. Otherwise, I'm a little bit worried for a deeper pullback on US30, right? So some sort of deeper retracement. But should we get an engulfing candle in a 1 minute, so meaning the same length as our bear candle, if we close out just above that in the next 10 seconds or so, that would be good strength to the top side. But again, a close there on a pin bar, I'm a little bit cautious of a pullback, right? So I just want you to understand that a pullback is possible. And just from a market structure perspective, a pullback to entry is definitely possible, right? We don't have a clean market structure here to determine, but we can utilize Fibonacci to understand on that last bull move, where could we likely pull back to? And I just want to make you aware of the fact that based on that, we could do a pullback past entry to that 78.6, probably the 88.2, and then continue to the top side. So I just want to make you aware of that. That's obviously fairly important to just understand. So the last impulse, a correction, natural retracement, and then a push to the top side. However, the trades are in profit and my stop loss is in profit. So there's no need for me to be hassling and fussing about this. Again, on the new platform, we can actually set up that when price breaks structural trend lines, it then activates orders, right? And again, this is what we're going to be using to trade the NFT, that we're going to set up market structure and not pending orders, but rather if markets go through or break certain structures, we can take that as a breakout and capitalize on those trades. So that is what the trading is going to be for tomorrow night. And we're going to put it in theory, right? Again, provided the team can obviously get through some of those beta bugs and get that plugin working, which I do have full faith that we will be resolving extremely, extremely soon. Right. Going back after the new platform and having to trade on MetaTrader is like, again, it's like driving in a bicycle, being chauffeured in a Bentley, and then having to get back on a bicycle. Like you even forget you have legs, you even forget you got a pedal, right? But in any event, US30 performing quite well. Not as close to a New York Stock Exchange move, but still it's performing fairly well. Let's quickly have a look at that dollar. As we move into the dollar index, we can see that the dollar's lost a little bit of value, right? And I got a lot of people messaging this morning saying, hey, listen, the dollar's losing value. I just want to point out for those who don't have the market structure, this may look like the dollar is losing value and all the rest of that. But for those who haven't drawn out their price action, right, they may not be aware that the fact that the dollar actually went back into structure and where it's currently sitting is well in a position to continue that bull run, right? And again, this is just not paying attention to your price action. Have a look at that, right? Have a look at how well this dollar has respected this 110.72 mark, right? We've used it as massive, massive resistance. We've used it as massive support in the past multiple times, and we're currently sitting on support. So obviously we need to just be cautious of the fact that if the dollar starts to rally over the next couple of hours, that would be negative for indices, negative for commodities. So I just want to make you aware that that is a possibility. But at the same time, should the dollar break that 110.7, 110.8 mark, it's very likely we could see a continuation of that bear run. And that's obviously quite significant, and we just want to be paying attention to that. In addition to that, we might have also very well seen not only a breakout and a retest of market structure, but a breakout and retest, break into and retest of this diagonal structure here. So the dollar is pretty much, it's anyone's game at this point. US30 still performing extremely well. If you've got a 300 pip trailing stop, you should be running a total of about 500 pips in profit per position at this point in time. So if you've got 3 positions, you're running 1,500 pips in profit. NASDAQ following suit and doing the exact same thing. Nice bull run on NASDAQ. But furthermore, having a look at gold, gold has been playing around on the zone for quite a bit of time. Now, I often get traders asking the question and saying, right, well, when a commodity instrument has really just played around on a particular area for a substantial amount of time, do we ignore it? Do we leave it? And this is how the markets are designed, right? The markets will go through a level with indecision, right? Enough times that you go, oh, let me look at something else. Let me not trade it. Let me give up on that instrument. And I promise you, the second you look away, the second you go, oh, I'm not trading gold, or I'm not trading NASDAQ or German 30 or USD ZAR, whatever the case may be, the second you move away from that particular instrument, it then moves more than likely in the position and the direction that you originally assumed, right? And if you know, and this has happened to you, please go ahead and put your hand up and just tell me if this has happened to you, because it happened to me countless times, right? Specifically USD ZAR. For those of you who remember a year or two ago, right, USD ZAR and me were not the best of friends, right? Every time we have a call on ZAR, ZAR will do some crazy things, right? Every time we have a massive sell opportunity at resistance, this thing will break through, right? Every time we've got a massive buy opportunity at support, it'll break through. And then I eventually just said, guys, me and ZAR are not friends. Instead of, just monitoring it and not trading it, I just said, let me focus my attention somewhere else. The second I focused my attention somewhere else, this thing started following price action. It looked like it was drawn, by an artist, a mathematical magician, perfectly hitting all these different levels. And I'm just like, and I've seen that multiple times over the last couple of years. So when is something is in this state that we see gold in, right? To summarize where gold is currently at, we can see that gold has gone through this resistance level, right? In this stage of time, multiple stages, right? We've got what I suspect to be a bull trap. We broke back into structure, nice push down to equal support here. So that double bottom there, another bull trap, right? Pressing through support, but failing to make it any higher. Even if we adjust our view to something like that, regardless, that was the original breakout. And again, now we're at this point in time. Yeah. Even if we do an adjustment, we're now at this point in time where, we need gold to recover and get above that 1673 mark. But more importantly, we need to get over this 1687, 1688, more in general, right? That 1690 zone. So we need to get gold above that $1,690 to an ounce before the next bull run is possible. Now remember, what the Federal Reserve does tomorrow, if that has a persistent weakening on the dollar, it means commodities can rise, commodities can go crazy, right? But if it doesn't, if we see a stronger dollar again, outside of the normality of what we've seen over the past 20, 30 recessions, then that won't be the case, right? We could see a continued sell-off on gold. But I promise you, the second we stop paying attention to gold is the second this thing's going to start to rally, right? And again, I can see the hands up. I was in a buy this morning on NAS and I manually closed the trade, break even, super well done. Apologies, but I missed the beginning of the show. Is there an update on the new platform? There was, Colin. Sorry, I have to go back to work. Cheers, Daniel. Have a good day. Maybe, guys, you can update Colin on the platform issue that I did earlier. Okay, so yes, that's essentially on gold. What we just need to watch out for. Brent, again, is another one. I probably should have used Brent as a better example because Brent, all right, from a daily perspective, has this beautiful price action, right? Massive structural support, great levels from a Fibonacci, from a trade perspective. I've got a bunch of analysis in here, so apologies if this looks like the drunk guy standing out the 7-Eleven. But the reality is that, if we have a look at this, we've broken through, we've had a bear trap, we've had a bull trap. We're now sitting at that structural support in terms of, that $94, $95. So that breakout there, I wouldn't necessarily trade. I'm looking for, and as I've said it before, that $98 to a barrel, right? That is my key zone and where I'm paying the most attention to. So just so that you guys are aware, that is going to be my main goal in terms of breakout there. But again, the second we don't pay attention to Brent is going to be that second that Brent goes absolutely more. Buyers are saying he's actually more scared of gold than his mother-in-law. Okay, yeah. Buyers, we need to get your family trading just so we can see what happens when they in these chats when you make your comments. I trust your wife is doing well, just FYI. I trust you're not using grocery money to trade anymore. I hope you're making your profits and you're in a position to, give her some grocery money as opposed to taking it. Bitcoin, guys, just in terms of a quick update. Again, I think with the jobs report and the Federal Reserve interest rate, should they mess up anything on the dollar? Should we see that dollar fall? Should we see economists across the board? Now, again, just so that you are aware, right? Economists, big banks, hedge funds are putting the Federal Reserve under a ton of pressure, saying that they're over-engineering some of these economic policies, that inflation, all these other things that they're calling for and making it so much more difficult for the average American to get credit, or at least cheap credit for that, that they essentially pushing the economy into a downward spiral. So there aren't a lot of people that are very happy with Powell, right? So he's walking on this tightrope. So any sort of economic policy that is an overextension of what the general public believes as necessary, he's going to get heat for that, right? And that could have a negative effect on the dollar. It can have a ton of effect. So again, what cryptocurrency is waiting for is any sort of shortcoming in traditional fiat currency systems, right? Because again, that's the premise of why Bitcoin and cryptocurrency exists, is to solve the issue of centralization and greed and manipulation. That's why it exists. Even though, right, from a hacking perspective, there's been more value in Bitcoins hacked in the past 5 years or 10 years than there's ever been in terms of bank heists. So again, right, if it solves the crime and the centralization issue, great, but it's also not a great testament if there's been billions in Bitcoin stolen over the past little bit. It's supposed to be so super secure, right? Or I don't know about that. You guys can leave your comments in this chat or in this video. I will have a look at them a little bit later, but I'm very interested to hear your opinion. Do you think Bitcoin is secure? Crypto is in general, right? Do you think it is secure to have crypto? What do you do? Do you have a cold wallet? Do you just have it sitting on an online wallet? What do you do? So from my personal perspective, I've taken my key, I've put it onto cold wallet storage, and I've hidden that away. Like, nobody would find that. But again, I don't know how sure I am or how safe I feel about that, right? Because the reality is that some of these exchanges have been hacked, and they don't need your wallet ID or anything to hack. They're hacking the exchange. They're hacking the place in which your wallet exists. So, I mean, is cold storage even the solution? I don't know. Let me know in the comments what you guys think about that. But in any event, US30 is still running nice and strong towards that top side. Bitcoin again, right? Any further breakouts to the top side again? I did say we could hit that $28,000 to a coin. But yeah, that is pretty much the only items I'm really looking at this morning. There are some opportunities that do exist for us on GBP/USD. Again, I spoke about that breakout towards the top side, that symmetrical triangle formation. GBP/USD did not, I just want to state this quickly, did not run to the apex, right? So it did not fulfill the classic price action formation of, trending lower lows or lower highs, higher lows, all the way to apex. We got a premature breakout here. So whether this is short-lived or long-term is obviously something we want to pay attention to. Again, the great thing about our new platform, right, is that we can literally go and do this, draw price action and say, okay, cool, Mr. GBP/USD, I get you're in a sideways range and I don't want to buy you, and I certainly don't want to buy you now. But when you break out of this sideways structure, whether you break out now, right, or you break out here or here or here, the later it takes to break out, the better of a deal you get, because it's going to turn, remember, it's ranging to the downside, right? So even if GBP/USD, right, ranges all the way down here and then breaks out, you'll get it, right, at, 120 pips earlier, because we can set a rule that says, hey, listen, only when you break out of this channel, this line, this triangle, this Fibonacci level, whatever, then enter a buy or enter a sell, and we can set up that risk management. So I'm super, super excited for the new platform, in all honesty. The end of the year, I start thinking about holiday, I start thinking about travel, guys, all I can think about is the new platform, right? It's going to change the way we trade. It's going to change the way we do shows. It's going to change the way we do just about everything. So we are currently doing a lot of R&D on the shows themselves. We're going to be bringing you a ton of diversity. And as you guys know, the goal and the vision is to run a 24/7 live broadcast, meaning different traders, different analysts, different opinions, different show segments. That in essence, any time of the day you can tune in. You can start to tune in on the times that you prefer the most, and you get the most bang for your buck, or what is most convenient to you. So the shows are going to evolve quite substantially. We will get to a point where you can physically come and view and visit us in studio and come and have a look at how the shows are run. So we're going to be very excited to be able to invite you guys to that. That's going to be big. That's going to be massive. And I can't wait, and I'll definitely look forward to that. So outside of that, guys, we're in a US30 buy. From a fundamental data point, we don't have too many fundamental events that are going to happen and affect the markets right now. The focus is obviously going to be on New York Stock Exchange. We do have some of that PMI data that is going to come out, but I think today is really about preparing for what is going to end up happening in the New York session. But again, most importantly, is prepping ourselves for Wednesday, right? Again, it's far better to remain cash in pocket for today, have some trades, do some things, right? Try and see if you can get your 3, 4, 5%, but ultimately looking at Wednesday, capitalizing on that, as well as NFP. So again, if you have your $100 live accounts, I will be trading live New York Stock Exchanges every afternoon. That is our dollars for lunch session. Then we have our pips for a special edition show that will be on Wednesday evening, and that will be covering the Federal Reserve. So we'll listen in, we'll stream what Powell is saying, we'll look at the movements of the market, and it's super fun, right? Especially this one, because of the fact that we are looking at and discussing, we've been speaking about this Federal Reserve interest rate for a while. For those of you that were live with us in the past one, this one's going to make a whole lot more sense. If this is your first time ever listening on one of these special edition shows. We will break it down. We'll explain what's really happening. So you definitely be a part of that. Kudai saying, must a breakout on a triangle reach the apex or about 70% of the triangle? So when we talk about a symmetrical triangle, all right, if we have a falling wedge, right, a falling, a bearish triangle, right, just a triangle, right, it means we've got a flat support and we've got a lower highs, flat support, lower highs. That's an indication that we are going to break to the downside, and that will happen between 70, anywhere between 50 and 70% of that formation. But when it's symmetrical, meaning lower lows, higher lows, lower highs, higher lows, so meaning it's coming perfectly to a point, we generally said get to that apex and then break out. So a descending triangle, flat support, lower highs, 50 to 70% of that market structure breaks out. An ascending triangle, meaning flat resistance, flat highs, but we get those higher lows. We see that build up into that market, 50 to 70% of that formation, we get a breakout to the top side. That's the general rule, right? It's not written in stone, but it's a high likelihood outcome. Unfortunately, what we're seeing with banks and big institutions, that they're starting to spot those moves, and we start to get a lot more bull and bear traps in these days. So we'll get a breakout, it'll pop out, we'll get super excited. Traders who, can't wait it out will end up jumping into that trade, but then end up seeing that it's just a bear trap or bull trap. Markets break back down and then move in their true direction. That's why a retest on any breakout of market structure is absolutely key. Guys, listen, I'm super excited to see where the balance of the day goes. We should have closed out some of those US30 trades, depending how big the retracement might have ended up being. I just want to share my screen one last time just to show you guys. So I'm closed out already. At this point, my trailing stops were already quite a bit in profit with that last move there. So I could close out somewhere around about where we are now in profit based on where we broke out. So remember, we broke out, we ran about 500 or so pips. What I would like you to check out is that we just are at support, right? So whether we get a continuation of this break to the top side is going to be up to you to decide. I just want to make you aware of the fact that we can and do have the opportunity and possibility to make a deeper retracement, which may look like a false move past support, but ultimately a push down to the 61.8 would be the bare minimum for me, and then that could be enough volume to push the top side. Now we are currently retesting support, so it is also very likely we could from support breakouts. What I would suggest, right, from a trade perspective, or what I would do, remember this is not financial advice, this is purely for educational and entertainment purposes, is what I would do is I'd look for a breakout again. If I want to chase this trade, remember, it's not about being early, it's not about predicting the position or the direction, it's simply about capitalizing on what that direction is once it starts to move. So being early is great, but it's not a necessity to be profitable and consistent. Is looking for that breakout of the 32,963 mark, so 32,963, that is on US30. Again, you can look for that confirmation on both. NASDAQ will have a very similar structure. NASDAQ certainly sees like it has momentum to the top side. I just want to draw your attention to the fact that German 30 has got that massive push to the downside. So you just want to essentially look for NAS break, US 30 break. That should be enough. Just make sure that German 30 is not going completely pear-shaped while that happens, because even though they're not connected, they can still affect each other. Guys, listen, that's all the time we have for today. Nice quick 45-minute stream. Remember, dollars for lunch stays the same, 3:15. We get started and we'll trade for about half an hour, up to 45 minutes, depending how much volume we have in that particular market. Remember, all eyes are on Wednesday. We are still and have a good opportunity to make some good profit this afternoon, but we want to end this week with an absolute bang, right? We want to close off last month with massive pip count. I don't know what our total is for last month. I know we had 1 week that was well over 20,000 pips just on its own. So I don't know what the total pip count is. I will look at that. We want to wrap up this week as a full closure of last month, but also start to get ahead and on the gains for the balance of this month. So again, if you've got your live account, the system will automatically send out a link to join our dollars for lunch. If you don't have that link, or you don't see it by around about 1, worst case 2 o'clock, then you can go ahead and use our support bot and just double check that your email address is the same one that you used to create your client's area. In the future, we'll be putting that link within the client's area. I'll just confirm with the team if that is sorted as yet, but in the future, In your client area on the Globex 360 CRM or client area login, on the left hand side you will see there Globex 360 live TV. And if you have more than $100, you'll see a dollars for lunch link. If you don't have more than $100, you'll only see a pounds for breakfast link. And again, tomorrow you'll see a special pips for dinner link, as we obviously trade the Federal Reserve interest rate decision live. If I was you, I would get ready, because that one is going to be massive. It's going to be major. I'm bringing my A game tomorrow for that one specifically. So we're going to have a really great session. Part 1 is trading on the new platform. Part 2 is smashing that Federal Reserve interest rate. Outside of that, guys, listen, as always, remember to live, trade the Globex 360 way. You'll have a ton of fun a little bit later on. I'll see you in dollars for lunch, 3:15. Till a little bit later. Goodbye.